Most mutual fund investors would know that value funds are known to outperform after a major market correction as the market starts to recover. Nifty 500 index, which fell by 23% between September 2024 and March this year, has started to show some signs of recovery. In the last 3 weeks, it has gained 10%. This made us deep dive into the country's largest value fund managing massive assets worth over 49,000 crores. Hello and welcome to our channel 5 Minute Finance by ET Money, where we discuss the basics of investing and personal finance. In this video, we'll look at 5 interesting data points about ICICI Pru Value Discovery Fund that will help you make an informed decision if you should invest in it or not. But please don't treat it as our recommendation. The idea is just to provide you with enough research and numbers to help you decide whether you need it in your portfolio or not. So let's begin with understanding value funds and the fund ICICI Pru Value Discovery Fund. According to SEBI, a value fund has to follow a value style of investing and invest at least 65% of its portfolio in equities. Now, an investor following a value style of investing seeks stocks that are undervalued, means trading below their true intrinsic worth. In simple words, an investor following a value style looks for stocks that are beaten down due to some reasons, but their fundamentals remain strong, and the investor believes and expects such stocks to return to their true worth over time, and that is where the investor sees gains. Coming to ICICI Prudential Value Discovery Fund. It is the largest value fund launched over 20 years ago in August 2004. It has delivered 14.39% CAGR in the last 10 years, slightly higher than the category average of 14.18%. But in the shorter term, the fund has conveniently outperformed the category and the benchmark index both. What makes this fund interesting is its year-to-date performance. So when the category and benchmark index have both fallen by over 20%, the fund restricted its fall to 10%. Now let's look at 5 things you should know about ICICI Prudential Value Discovery Fund. ICICI Pru Value Discovery Fund has been a consistent performer in the long run. Going by rolling returns, it has comfortably outperformed its benchmark and the category average both. Now this data tells a lot about the fund's performance, as rolling returns are the returns that show how much an investment has returned over a fixed time period like 1 or 3 years, starting from different points in time to give a more consistent view of performance. So rolling returns for a period is the average of thousands of instances of that period in the past. Thus rolling returns tell us a lot about the fund's consistency. The fund is more volatile than the category average in terms of 5-year rolling returns is evident from the fund's higher standard deviation, but as the investment tenure becomes longer, the fund's standard deviation comes in line with the category. Standard deviation is a measure of volatility. Higher the standard deviation, the more volatile a fund is. Now the fund has fallen less in turbulent markets. Out of the last 60 quarters, the Nifty 500 index was negative in 21 quarters. Of these 21 quarters, ICICI Pru Value Discovery was positive in 5 quarters. In fact, in 15 out of 21 quarters, ICICI Value Discovery fell less than the broader markets. No doubt, this fund contained downside in a decent manner. ICICI Value Discovery remains large cap heavy. It had an average exposure of around 72% in large caps at all times in the last 5 years. So this fund's high and consistent allocation to large caps could be a major reason for the fund's better performance during bad markets. The fund manager believes in buy and hold strategy is evident from the fund's portfolio turnover ratio. It has maintained an average portfolio turnover of around 55 to 65%. A portfolio turnover ratio of 100 means the whole portfolio was changed in the last 1 year for that fund. Now it holds 65 stocks in the portfolio and looks well diversified with top allocation to banking stocks such as HDFC, ICICI and Axis at present. The top 10 holdings of the fund are on your screen. So to summarize, ICICI Pru Value Discovery is a conservative, well-diversified fund with a high tilt towards large caps. It offers a decent downside protection. And it's a wrap. I hope these numbers would be of help to decide whether ICICI Pru Value Discovery is a good choice for your portfolio or not. Do let us know what your thoughts are in the comment section. If you like the video, don't forget to like and share this video with your friends, and we'll see you with another insightful video soon. Happy investing.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.